My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 4th, 2021, and Bitcoin has just crashed quite a bit. Some people are calling it a flash crash. Some people are calling it a black swan event. We all know on this channel that this was not necessarily expected, but within the realm of possibility, okay? And we've been tracking it, and we've been tracking downside price action quite carefully, yeah? So this is not out of left field. This is basically along the lines of what we've been observing in Bitcoin's price action. Anyway, the purpose of this video is to observe and study the anatomy of a reversal. Why? Because a lot of people, our community members included, are going to want to start looking for long positions right now, right? The market dumped. Lots of people sort of got liquidated. Lots of longs got liquidated. And so the natural, logical conclusion and I guess follow-up is that now that the market's dumped and stabilizing, we want to identify points of entry to take advantage of the reaction rally or the relief rally, if you will, okay? So this is basically what I want to talk about. What does that technically look like on the charts? If you're subscribed to the channel, you'll know I talk about this quite a lot, right? And I use this on smaller time frames. I use this on larger time frames. So this is invariably what a reversal looks like. Obviously, you can get a V-shaped reversal, right? That looks something like this, right? Or like this. But that's less likely, right? Especially in a large correction where a lot of people lost a lot of money, you need some sort of consolidation, and that consolidation is going to look something like this. Down, right? And then you go up with an A wave, and that A wave is going to take you quite a decent distance. And then you go down with a B wave, okay? And then you go up with a C wave. You have a retrace, kind of a, how do you call it? A pivot. That's what I call it, right? So you have A, B, C, and so it ends up on a larger time frame, smaller time frame, looking like 3 touch points to the bottom. This is what you're going to want to see, okay? And I talk about this all the time on the channel. Subscribers probably already know exactly the context of this video, but this is what you want to see before you start even thinking of entering long positions, okay? Please, 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 if you want to trade safely, if you want to invest safely, don't just throw money at something. You know, look at the charts, try to observe a reversal pattern before you get in, okay? Let's get off of this tool. And so now I'm on the smaller time frame because you can't really see too much on the larger time frame, but you see an A wave starting to form, right? Okay, let's say this is the end of the trend, which we assume it is for other reasons. If you want some more explanation, just check out my previous video I made just a few hours ago about what is Bitcoin doing, same date, December 4th. And essentially what you're going to want to see is something like this. Right? We know that corrections happen in threes, and this is fractal, meaning it happens on every time frame. So this is why this A wave is comprised of 3 waves, okay? So let's make this, yeah, we can keep it blue, it doesn't matter. So we're going to look for something like this. A, and then again, right, the B is going to be 3 waves. Usually B retraces on A, meaning it makes a lower low. And if you take the fibs, it'll be between the 1 and the 1, 2, 3, 6. Just on the balance of probability, looking at so many of these reversal waves, this is what I've seen. It can go all the way to the 1618, but that's very rare. But usually it's between the 1 and 1236. This is it's a risky entry point. I'm not going to say it's dangerous. Depends on your trading style. I used to love trading these and getting in at the lowest possible point, but it's less predictable than the other entry point I'm going to show in a second. So let's make this a different color. Let's make this pink. Okay, and then lastly, like I said, you're looking for a C wave, which is going to be the C wave is going to be impulsive, but you're going to be looking essentially for the impulsive part of this corrective wave, which is going to take you into the next uptrend. No, let's make it something more distinctive. Let's make it green. Okay. So this actually is going to be the pivot, okay? Because we all know price action doesn't just turn on a dime. You need a pivot. So this flat correction here is going to be your pivot. And as I said, it's going to take you into the first wave of the next impulse, okay? So you have 5 waves down. We know every impulse is comprised of 5 waves down. Every single time you have 5 waves down, you have 3 waves up. You have 3 waves up, or you have 5 waves up, you have 3 waves down. We always get 5 waves followed by 3 waves. So these are the 3 waves we're going to get. A, B, C. That's essentially it. Just to simplify things, right? We all know this. Well, those of you who study Elliott wave theory, and this is why it's so powerful. It's just so simple in its consistency. I hope that makes sense, right? Every time you get 5 waves down, which obviously any impulse is 5 waves, right? This is why on this channel, I trade impulses. I'm just invariably trade impulses because they're high probability trades. They're easy to read, relatively speaking. Okay, so you have your A wave, your B wave, and your C wave. It can't get that much more simple, right? You just look for these patterns on a smaller time frame, on a larger time frame. Obviously, once you get that, and I don't know how long it's going to last, right? With something like this, where a lot of people lost a lot of money very quickly, you have to give the market's going to take its time to consolidate. So these waves may take some time. Are you going to want to trade these up and down? You can, but obviously, this is an impulse, right? I guess this was an impulse right here, or actually this will be an impulse, but a minor impulse. This will definitely be an impulse. We've traded this. We were actually shorting this the other day on Chainlink. And this will be an impulse, right? It depends where you want to get in. Everybody has a different trading style. So, whatever your rules are, whatever your guidelines are for being profitable, being consistent, just follow that. But this is the anatomy that you're going to want to look for a reversal. And I personally, let me just erase this. I personally like to get in on these trades, like I said, either here or here, because we know that this is going to be an impulse of 5 waves, right? So if you're going to get 1, 2, 3, 4, 5, right? You're going to get 1, 2, 3. Oops. Let's just do that again. When I say it's going to be an impulse, I just basically mean it's going to be 5 waves, right? So after 5 waves, we get 3 waves down. This is my very safe conservative entry. If I'm making a 4 or 5 figure trade and I'm not messing around, I'm not taking much risk, I'm going to enter here and use my fibs, right, as my stops. And that's going to give me a very high probability trade. I'm going to take the fibs on the impulse and I'm going to go down below the 618, right? Because we all know that every impulse has a 2 wave, or we all know that the 2 wave cannot retrace below the 618, right? Probabilistically. So I'm going to hide my fibs below the halfway point of the 618786, the golden band. So around here. And that is a super high probability trade. I can do that one in my sleep. The hard part about this is the patience to wait for it to form, to wait for it to materialize, right? We all want to get in here, all want to short this and maybe get in here, right? Because this is the lower point. And, once you start reading fluently, you start getting pretty confident. And, you don't want to mistake confidence for irrationality and risk, because all of this can be ascribed a certain risk, uh, a rate of risk, or a risk percentage, right? If you just look at it in a cold calculating manner, this is more high probability than this, and then this. And whenever we're trading, we know nothing's ever 100%. We're just making highly probabilistic trades that, invariably lead to the outcomes that we think we're going to get, right? So we're never 100%, but this is very, 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 very close. This is a 90+% accuracy. And you know where to put your stops here. You don't know where to put your stops here. You don't know where to put your stops. So this is the anatomy of a reversal. This is what I will be looking for in whatever I'm choosing to long. I am not longing Bitcoin. Those of you who are subscribed to the channel will know why, right? Because it's in a corrective mode and it's not in an impulsive mode. I'm longing things that I anticipate will be in impulsive mode, like Chainlink, like Litecoin. I'm not touching Litecoin, but just giving an example. And other coins that are in impulsive mode. And you can tell which ones are in impulsive mode because they will have already given you to a larger degree, their A and their B waves, and they're forming a C wave in an impulse. For instance, let's just go to Chainlink really quickly so I can illustrate this more specifically. So Chainlink, just go back on the 4-hourly time frame. This is exactly it, right? We're looking for a reversal, and why is Chainlink in an impulsive mode? Very simply because we have an A wave, a B wave. Your corrections come in threes, invariably. You gotta get 3. There's no exception to this rule, right? And this is the beautiful thing about this Elliott wave theory. These simple, elegant rules that you can apply, these principles that you can apply, discretionarily to a variety of price action. So yeah, A wave, B wave. For those of you who can't tell, I'm gonna just draw it really quickly. A wave, B wave, and we know that if this is a larger degree A wave, right? Let's just call it small a. This is the larger degree A wave. This is the larger degree B wave. We know that this has to finish out. This is why we're trading Link, because it's in an impulsive mode. It's going to be in an impulsive mode. And so we're looking for reversal at the bottom of this B wave, right? And so we've already formed what I call the pivot. And if you zoom in a bit, you see, let's get off auto, let's get off log. Let's get on a smaller time frame. You see that this is the pivot that we're forming here. A, B, and C. Okay, so we're looking for that pivot, and that C wave is going to give us our impulse. So this is basically what we're looking for, and this is why we're keen on trading Link for the month of December and maybe into January. I'm not exactly sure. I don't have a time frame. But yeah, we're in the B wave, and the B wave just completed. Nicolas, s'il te plaît, mon cœur. And now, even with this dip, we still maintain market structure. Right? It's still, still the same plan. It's just this B wave is extended to the downside. And if you take this, the fib retracement on the A wave, you see that the B waves come to the 2618. I just said that usually you see the B wave end between the 1 and the 1236. This is what we're anticipating. But, because of what happened with Bitcoin and its extended fifth wave, we got a B wave that came to the 2618. Okay. So this is, again, those of you who are interested in trading, link with us. We're still planning and plotting to trade this. And this is exactly why. And this is where we're at. We're going to try and form this A, B, and then we're going to get in, hopefully, either here or on the get back here, on the pullback of C, right? And this would be the safe place, especially if you're not exactly sure when this is going to occur, okay? So, hope this was helpful. Hope this was useful. Hopefully, everybody's safe. Hopefully, everybody was safe during this big dump. You weren't overly exposed. If you were, take the lessons learned. Nicolas, s'il te plaît. Take the lessons learned, journal it. Make it so that if you lost money, whether it's realized or unrealized profits, you learned something, you gained something. Don't just lose money for the sake of losing money, but learn lessons. And then eventually, over time, you will outperform the market just by, being a perpetual learner, right? Always being a student of the market. You're going to outperform the market, right? Don't just take the loss and not learn from it. So yeah, that's it. Subscribe, share, like, do all that good stuff, and I'll see you guys soon.